Hello everybody, this is Lara at Pure Elliott Wave. I'm going to look at US dollar index or DXY with you today. Before I do that, I'm going to be closing this poll really soon. It'll be greatly appreciated if you could click on the link in the description box below and answer one question. This will take you just a few seconds. And when you've done that, let's have a look at some Elliott Wave analysis of DXY. So I'm working through my list, which is pretty long. It's closed. Any further requests or any new requests at this time for more analysis will have to be declined until I've got that list down to something more manageable. That's better for my mental health. DXY today, what have I got coming up? After this, I've got XDC, Casper, and then Zcash. So that hopefully will be coming up this week. I'm going to update my Elliott Wave analysis, or I've already worked on it. I'm just going to finish up the weekly chart. This is my monthly chart for DXY, and from previous movement, which I don't have data from FXCM at the moment, but I have previously done work on that, and it does subdivide as a huge corrective structure. And so I'm going to start my wave count down here in August 2011, and from this low to this high, this subdivides beautifully as a 5-wave impulse. I'm going to label it primary 1, 2, extended 3, 4, and 5. That's followed by a second wave correction, which is very obviously over because this upward movement has moved beyond its start. So now cycle 2 could continue further as a flat correction, but I think it's probably over here as a relatively shallow zigzag because this upward movement doesn't look like a B wave. It looks like the start of a third wave. It's got an increasing slope and an increasing range. And so cycle wave 2 has lasted 11 months, so just short of 1 year. That's absolutely acceptable for a cycle degree wave. They usually last from 1 to several years, so just short of 1 year is fine. And it's almost perfectly a 0.382 Fibonacci correction of cycle wave 1, so that's really satisfying analytically. So the focus is going to be on this movement from this low back in February 2021, this upward movement. What's it looking like? Let's have a look at the weekly chart. I haven't done the subdivisions of that yet. Let's have a go, because it looks like primary wave 1 is probably incomplete. So the question is going to be, when is primary wave 2 going to turn up? It could be a bear market, it could last, it could even last a year, probably a few months. So let's just decompose this impulse. I think this is the middle of it, and this might be the end of the third wave up here. I'm looking at MACD, using that as a guide. Here's the middle of the third wave, so the strongest momentum is here, and within the third wave, the strongest part of the histogram is here. So I think I want to label this like this, but I don't know if one's going to fit. But this is how I want to label the third wave. Let's get that in first. Yeah, that's how I see that. And then the first wave, is this going to work as an impulse? Because it doesn't look like, oh yeah, it will. It doesn't look like a diagonal. Yeah, I think this is going to have to be over here. Yep, this is going to actually work quite nicely. I'm sorry, I don't know what's wrong with my voice at the moment. It hurts. I have no idea what's happening with that. Oh, that's a bit sad. Oh well, we'll live. So long as you can hear me and we're not doing any damage, I guess it's all good. Okay, I think we might be in the 5th wave at intermediate degree within primary wave 1. And just now moving through the middle of -3, and then we'll have -4 and 5. So for the weekly chart level, for now, I think I can move the invalidation point up to here, and then once -3's moved a bit higher, you can move the invalidation point up to the high of -1. -4, little correction to last maybe a couple of weeks, 4 at the most, may not move into wave 1 price territory. When that's finished, another high for -5 to move beyond the end of 3. And when that's finished, the invalidation point moves all the way back down to here. Primary 2 may not move beyond the start of 1. So I'll leave that there and I'll add short-term invalidation points just to try and make this a little bit clearer. If intermediate 5 were to only reach equality in length with intermediate 1, the target would be a 13.524. I don't think that's going to be enough room for the structure of intermediate 5 to complete, but I'll put that in there. So if that first target is probably not going to be high enough, what would the next target look like? First of all, let's see if there's a ratio between 1 and 3. So if the first target is inadequate, it may be too low. At 13,524, intermediate 5 would reach equality in length with intermediate 1. If price reaches that first target and just keeps on going up, then attention would turn to the next target. At 13,893, intermediate 5 would reach equality in length with intermediate 3. But there's also already a Fibonacci ratio between intermediate waves 1 and 3. Intermediate 3 is fairly close to, it's just 70 less than 1.618, the length of intermediate 1. So we may not see a Fibonacci ratio between 5 and either 3 or 1. Let's see if we can get a channel around this. Let's use Elliott's first technique from 1 to 3 with a copy on 2. Doesn't really have a good look. Let's just pull it down and adjust it to sit on 4. Oh, that actually looks pretty good. I'm going to leave that as that is and just say that's an adjusted Elliott channel. I'll look for price to find resistance and support. Resistance about the upper edge of the channel and support about the lower edge of the channel, while intermediate 5 completes primary wave 1. A breach of the channel to the downside would indicate that intermediate 2 may have arrived. That primary wave 2 may have arrived. I would expect primary 2 to break out of the channel that contains primary wave 1. And when the channel is breached to the downside, that would be a really good indication that primary wave 1 is over and primary wave 2 may then be underway. Okay, let's look at some classic technical analysis now. I'm just going to look at the weekly chart and I want to see how extreme is this upward trend. Before we do that, let's have there's really not a lot of support and resistance at the moment, is there? Let's see. Well, support down here, resistance here. Okay, let's expand this out. So resistance 12,958. Well, actually now that should be support. Final support 11,568 for now. Okay, let's look at this upward trend. How extreme is it? First of all, there is no bearish candlestick reversal pattern. This is an upward trend. ADX tells us it's an upward trend, but it's really extreme. How extreme did the last upward trend get? Let's have a look at the strongest portion here. How extreme is this? ADX reached above 60, RSI reached fairly deeply overbought and remained there for, my goodness, almost the entirety of this really strong movement. So RSI reaching overbought does not mean that this market has to end. Obviously, it can continue for quite a while and ADX can get really extreme. So what's the situation now? Not nearly as extreme. So RSI is not as overbought as it can get. ADX, getting kind of close there. Okay, I'd be looking for an end to upward movement, maybe not quite yet, but soonish. There's a little bit of bearish divergence between these highs, the close of this week here and the close of this week here. RSI failed to make a corresponding high, as did money flow index, with ADX very extreme. I think the end of this upward movement could come sooner rather than later. If my analysis is wrong, I think maybe this first target may actually be more likely, and we could see this could be. Sometimes 5s can look like 3-wave structures, I've noticed, but they'll subdivide as a 5 at a lower time frame. If I label intermediate 5 like this, then this first target could be right. It looks like we might be getting an interruption to this trend, or maybe even a change to a bear market. Not very soon, but soonish. Volume is pushing price higher. On balance, volume is making new highs with price. ADX very extreme. RSI currently overbought. Money flow index neutral. ATR increasing with upward movement. This certainly does look like third wave behavior. I expect it's a first wave of a third wave. So primary 1 of cycle 3. So still within a third wave, and first waves can start off strongly in some markets. Okay, that's my conclusion for US dollar index. I have a short-term target, I have invalidation points, and the Elliott wave analysis has reasonable support from classic technical analysis, so I'm pretty comfortable with that. Thank you so much for your support, and if you haven't already done so, could you take just a few seconds, click on that link and go and answer that one question for me. I'll be closing the poll in a few hours, and that's going to be the name of my next online course, which I hope to be launching maybe in another month or so. Okay, thank you so much for your support. Oh, and thank you so much again to Tom from CoinsKid and all the lovely CoinsKid crew. I really appreciate your support. That's just blowing me away. That's just so lovely. Thank you so much.